All right, Saturday morning, I'm doing a recap of the Friday close. S&P was sideways up. So I took a look at the other indices, and it's more the other indices that found support rather than the S&P. So the S&P just went sideways, as you can see, nothing major. There's no reason really for it to have found support where it did. But the only reason I can see it found support there, or at least that it went sideways up, was because of the Nasdaq. As you can see, that touched prior resistance, which acted as support just under 300. So, it's looking for a small reversal. Nasdaq, this is typical bullish pattern, sort of come back and test breakout and then see if you can go back up. I don't think it will. I think it might go up a little bit and then fail and then back down we go. But I think the Nasdaq found a little support, very short term. The Dow Jones sort of didn't flush. I think, when the Nasdaq touched its bottom, the Dow Jones coincided with the low of the last couple of trading days. So it found very, very short term support there. Again, I don't think it will crack. And actually, this trend line is no longer valid. So this can just become, to be honest, you can delete it. And if you really want to be very, very short term and precise, you could say it's this here. So now we've got a very, very narrow channel. So let's see which one cracks first. I think the lower channel, the lower support will crack, and down we go down to this area. But yeah, for now, the Dow Jones also found ultra short term support. And then the Russell 2000 has tested this descending line. The reason this descending line works is because well, it's very long term and it hasn't been tested yet. So we've bounced off that too. So normally now the Russell 2000 will also bounce and see if it can go and, well, at least take out this high here, 195. Again, I think it will rise and then fail and then back down we go in all the markets because I remain fundamentally bearish. And although technicals do win short term, I have to respect how unbelievably bearish I feel fundamentally. Inflation certainly not going down, in my opinion. Interest rates going up, too much debt, geopolitics, just etc. etc. I've listed it all many times. Multiple black swans, just a fleet of black swans around. So yeah, I mean, for me, the Russell 2000, it's more obvious why it found support here. Dow Jones, more obvious here, hitting the low. Nasdaq, more obvious here, touching this prior resistance stack of support. And the S&P just sort of went with the other markets. That's my opinion. Sometimes you don't need a reason. Sometimes the markets just act as they do, just short-term momentum trading or just minor news coming out during the day. But basically, I would describe Friday as a sideways day, nothing crazy. So we might have a small bounce and then back down we go. Let's see. Let's see what happens Monday. The VIX, by the way, nothing crazy, although during the day, and yeah, I should mention that we were actually lower during the day. We just rided a little bit, but you can see the VIX really did try and test this 22 zone, closed red, but not majorly. I wouldn't, normally this kind of a sort of reversal candle would suggest we're going lower, but for me, the VIX, and yeah, I did say you could go a little higher in the market. So the VIX could go a little lower on Monday or early next week. But I do feel like we're going to go back up and test 26 with the market going lower. So I think a breakout of this wasn't just to go up a little bit and come back down. But again, the VIX has been sort of a broken indicator for a while. So let's not read too much into that. That'll do for the general markets. Let's see early next week. And by the way, the DAX, the German market, that came down a little bit finally, but and I drew this support line. I haven't drawn over the older, thinner green lines, and some of them are invalid now anyway. But let's see if the DAX does come lower, which it might not because it has to make up for yesterday. The American close, which was a little higher towards end of day. But we got a bit of support here. Not only this sort of low around here for these trading days, but also the ascending support. So I think the DAX will find short-term support around 15,000 if it even gets there on Monday. But I'm looking for a crack of this ascending and then back down to this area, which is also way too high. I have no idea why the DAX is this high. Obviously, the bulls have been correct whilst I've been raging on about how ridiculous this is. But I really think that as rates go up and we'll move on to that, everything will come back down. So let's go to rates because this is starting to hit the wires a bit more. The 1 year I mean, look at that. We're still trading above the top of this channel here. In fact, we made a bit of a new high. We can ignore this tail here, but made a bit of a new high on Friday. Okay, we closed lower, but still highest close in a while. For me, this is alarming stuff, especially when you look at the 2 year, which is basically the federal funds rate. This is what the Fed follows. And here we've touched the resistance. And I think this resistance is correct, you know. Okay, it could have been here. You could say the ultimate last line of resistance is really here because of these candles. But either way, it's the same thing. And once we close above, if you want to be very, very precise, for 4.575, which is one trading day away, as long as they go up, then there's only one way to go. I mean, okay, we might have one little line here because of these, 4.75, but basically we're going to be testing 4.9. And that really doesn't take long. So the 2 year alarming stuff, look how fast it was to just reverse from this low when everyone's talking about going below 4%. And then in basically a week, or I don't know, 1, 2, 3, 4, 5, 6 or 7 trading days, 1.5 weeks, we're testing this line in the sand here. And it will take just another 1.5 weeks to go and close to new highs, which to me would equal the markets at new lows. It should. I mean, that's not going to happen. You're not going to find new lows in the Nasdaq, especially the Dow Jones, in 1.5 weeks. Things take time to go down, but still, things start to flash crash. I think once you get yield, watch out with yields. Seriously, 5 year, definitely. We've closed above the descending for some time. Look at this. This is a nice move up. This is a nice advance on your way up to this line here. 4%, nice psychological zone. What happens when the 5 year closes above 4%? That will hit some of the algorithms. The 10 year, the most important one along with the 2, that's creeping up to 3.9, maybe 2-3 trading days away. Once that hit closes above 3.9, next zone is basically not even 4. 4 doesn't even act as resistance. It'll go right through 4 and straight to 4.2. Maybe a little stop off here intraday. Basically going to be testing new highs in the 10 year, where real estate has its locked interest. I mean, all of the markets are based on the 10 year. The 10 year going above 3.9 is a massive, significant negative burden on the market. It should be. Maybe there's a bit of a delay, but, take advantage. The 30 year. Yeah, well, Friday's close marked the first time it was an obvious close above this descending line. And, next stop is 4%. And the 30 year closing at or definitely above 4% is definitely going to hit the wires. That's the kind of stuff that the big institutions will be talking about in the morning before they start trading, in my opinion. So the yields are the most important sector to watch. They were at the beginning of the bear market. And since we've had this big rally, everyone's only looked at sort of the short-term technicals of the rally, whereas the fundamentals, and look at the news, they're sort of reviewing all this news and it looks more negative and inflate. For me, the fundamental news is starting to match what rates are doing. And rates are always forward-looking. I think the rates have figured it out and that they're going up for a reason. This is not just random trading. And the stock market, will follow suit with a small delay. So I think you have a bit of an opportunity when you're looking at the yields here. Also, by the way, the European yields might even be worse insofar as they are going up faster. They'll probably make new highs, especially I look at the EU 10 year, which is basically the German 10 year. It's the exact same thing. And if you look at the French, it's almost the same thing. The Italian, a little less, but they're all following suit. So that's why I just look at the general EU 10 year. Look at this. This is, I don't know how many days away from hitting the old highs, making new highs. This is like 3 days, as long as they're all up. One to take us basically up here, 2.5, and the next one to test this, the next one to close above and just mark a new record high. Look at this chart. It's beautiful. It's very easy to read, and I think it's very clear where it's going, and it has the fundamental to back it. So, and okay, like the French year, same thing. It'll hit 3% and close above very soon. The Italian, okay, it might take a bit more time, more resistance on the way up, maybe a tiny pit stop here, then definitely a pit stop here, 4.7% before basically 4.9. the Italian economy, by the way, it's like the Greek economy, it it stops being in the news once there's a bit of a bailout, once basically money's being printed to make up for the debt problems, but the fundamental issues in the background and it gets worse. And the Italian economy, a bit like the Greek economy, is once the market starts to get its eye on the Italian economy, like yields closing at new highs, that will just cause a catastrophe for the EU very quickly. And then the whole it's just dominoes, and this going up is the worst thing that can happen to the domino. The British remember this. This was the bailout, basically a bailout of the pension funds, and then down we go. Yes, the British government is gonna be very serious with dealing with debt. Absolute garbage. The market bought it for a while. I feel like we've had a bit of a double bottom here, right? One, two. If the British yields start to close above 3.7%, I'm looking at the 10-year gilt, or the 30-year, look, that's even more advanced. 4%. How many days away? How many days away are we from closing above 4% on the 30-year? Three. It seems like 2 or 3 days is the key for a lot of these. So watch out, next week. And it might take a bit longer, so end of next week. But you could have sort of yields looking to test new highs the week after next. It's just something I'm considering here, a couple of days away from testing this. And then if we close above, even the British yields that are the lowest of the pack that I'm watching, you can have all of them testing old highs, and then the markets are just, anyway, I'm reiterating the point, but you can see from all the yields I'm watching, there's just the Japanese I didn't watch because that's kind of a broken market, but that might be the worst. I mean, anyway, watch out for yields. Seriously, I think you've got a bit of an advantage by watching the yields and seeing where they might be going, and therefore where the market will go with a small delay. Let's look at the dollar, which essentially is following the same pattern as yields, which makes sense. It did on the way up during the early stages of the bear market. Then we retraced just like yields. And now we have this nice reversal and 103.5, which, to be honest, I can now delete because we know it and it's been there and it's now no longer applicable. It's really the descending line. You can see how that is definitely working out. So it's good reassurance that my technicals sort of work. I think we break out of this descending line. And I said it before, a close above this little high here, call it 104. And it's a nice psychological number. And it's also the high of this area, or at least the open. So a close above 104 marks a total breakout of this descending line. And then we go straight here. And you can see, we've got another hammer, just like the day before, just like Thursday. But the hammer was better. It was green. It closed higher. It went lower during the day, so an even better hammer. So this is a nice curl. We close above 104, and we're testing basically 105.5/106. I would say 105.5, really. Let me just move this down a little bit. And yeah, and then there's the next. I think the rest of the horizontal lines are completely correct. So we got this low. And then, I mean, we'll see. I don't like to venture too much into the future, but, once you're clearing this horizontal line, then you'd probably coincide with this low here, which would basically hit this descending. So you got to imagine where you are in the time period. So just go sideways like this. Obviously, there'll be some back and forth, some up, down, but, hitting this horizontal line, then this horizontal, maybe we'll be hitting it here. So just below this horizontal. So maybe we close above the descending before 109. But I still think, and let me get rid of this because there's no point in keeping this. I still think that the dollar has more resistance than the yields. Obviously, now it's actually very obvious, but although I'm very bullish on yields going up to new highs, I find it hard to imagine the dollar making new highs because there's a lot of resistance on the way. I think we'll clear this quite easily. This can be very quick, especially if there's, the kind of alarming day where everything's sold, capitulation, dollar up, everything else down. Yeah, so you could seriously scream through these sort of two horizontals, but then, yields by now would be at new highs for sure, but I just see it quite hard for it to keep going here because it'd have to go back also and retrace a bit. And so, yeah, I don't know about the dollar making highs above 115, 114, but I do see us going at least to 108 108, maybe even 109. So I'm still very bullish, short-term and medium-term dollar. And again, this would add more pressure to the markets. Let's look at the commodities. Copper. Yeah, so this I thought it was a bit too early to bounce. It looks like this was the worst close in a while, so maybe we're already ready to make a new low. And I think if we do flush, we're not just going to hit 3.9 here. I think this horizontal line is, I mean, it's still easy on the eye, but I still think we'll go lower, and we'll probably hit this ascending support because it would coincide with this sort of zone, but I think we're actually going to go lower. So I'm going to leave these lines in, although to be honest, we'll probably make that move quicker. I don't even need these lines. I'll remember anyway, but it ruins the chart a bit. But I think we're going to sort of go lower around here, 3.74. And if the markets start to crumble, we'll definitely do that because copper and the markets really move in tandem. Natural gas, however, is kind of the opposite because it's working on its own dynamics. Even though it's a commodity and the dollar and yields should impact it, I really think it's going to break out. In fact, I think it has broken out. I mean, look at this compressed curl coming here, this close at high of day, with the dollar up, with yields up. Okay, the markets were also up, but I feel like next week we just go straight past 3. This is like my old school days of trading where you're really zoomed in on this is the most bullish pattern that I would like to trade, that I still do trade. I mean, when you're bullish a sector and it's crushed and it's starting to curl and break out of this descending line, this bullish flag, this is the best thing to buy. It's the most risk in terms of risk reward, in terms of fundamentals, short term, medium term, and long term. I would be bullish this, and I am. I've already bought my stock. If I was thinking about going long natural gas and I was already in, I would buy more here. I really would. Because this is, imagine your average is here. This, you'd be able to move your average down to whatever, let's say 3. And then straight away, Monday, Tuesday, you're probably in the green or in the black, whatever. So natural gas, very bullish. Just zoom out of that. Look at that. Absurd. Absolutely absurd. And now technically bullish. More bullish now than ever before. I mean, look, during this drop, it was just red candle after red candle. The green candles would just take you back to resistance and that's it. But now you've got several green candles. Now they test, yeah, basically very bullish, just almost guaranteed to go up, if I can say so. Oil, I think there was some news. I think Russia cut 500,000 barrels or something, so that went up also. I mean, to me, it's in the middle of a channel. I'm bullish oil, so I wouldn't be selling here. I wouldn't necessarily be buying, but I think it will break out of this. Yeah, bullish oil. Very, very strong support down here in the low 70s. If it ever flushes below, actually saying that I did buy my first oil stock in a while yesterday, which is Prospera. PEI is the Canadian ticker. I'll show it later. Actually, I'll show it now because I might forget. This one here. And I bought the Canadian ticket because I couldn't find the US one on Interactive Brokers, which is really annoying because I don't like to hold Canadian stocks. I've got all US stocks now, but yeah, I had to buy that 0.145. I bought it. And then basically a few minutes later, it just popped up and then came back down. So very bullish. I bought it because I wanted to buy it lower. So I didn't go all in. I never do that anyway. But let's say I've got 1/3 of a position. And if it starts to flush back down to 10 cents, I'll be buying the next one. And if there's some alarming out of nowhere flush, I'll buy again. That's for a crash buy. But I've just chased my 1/3 buy, and I'm just going to leave this for months at least. So I'm looking for a massive pump for this one. So it's kind of a fire and forget for now. But if it goes lower, I've got more to add. And I bought that because the individual stock is, in my opinion, sort of breaking out. It's made quite a few YouTube headlines, and I believe the story. So kind of a lottery ticket chase. But also when I looked at oil, which is why I'm bringing it up now, I thought, yeah, this Russian news, maybe we break out of this and keep going. So I just don't want to be chasing that stock when it starts to go in the 20s or something. because it's a long-term buy. So that's kind of something I bought because of oil. But again, if oil goes back down, hopefully the other stock goes back down. I can buy more because I've got more to buy. Now on to gold and silver. So not the most crazy. Yeah, no, it wasn't really a ridiculous day. It was sideways, I would say. I mean, look, it was up 0.25%, silver unchanged. So I think what we had was a test of the broken down channel. So now that we closed on Thursday below, I do expect it to go back down here, by the way, still, especially with the dollar and yields going up, in my opinion. And the markets will probably, bounce 1 or 2 days and then go lower. So I do expect us essentially to do this sort of a move. I think what happened yesterday with gold is it tested. See, this ascending support, this ascending line was support, and it was support on the massive drop for the next couple of days. And then when we lost it, now we retested it. So it acted as resistance and we closed much lower. So that's a nice typical sort of pattern to retest prior support. Does it act as resistance? Yes, it does. What would have been good, what would have been bullish is if it closed within the ascending, then you're back on for maybe a move higher. But in this case, it's bearish, even though it was green, in my opinion. So yeah, I moved back down, and then we've got the trend lines. I've already discussed this. I think we're gonna go a little lower. Silver basically copied gold. It was even more bearish, even though it wasn't red. Again, we didn't actually test any resistance lines, but we went all the way back up, closed towards low of day. So I think this one, just like gold, we're going to go lower and test the next line of support, which is this horizontal line. So gold and silver short-term bearish, which is very good. I have a lot to buy in terms of stocks, gold and silver stocks, which we can move to here. Here you can see gold and silver stocks actually had a bigger red day than the underlying metals. That's despite the markets being slightly green. You could call them, the S&P, the Nasdaq. So I think, and actually, if I look at the GDX, we kind of touched this ascending line. I mean, I know we didn't really precisely touch it, but who knows if my line is the same line everyone else is watching, and it's a thick line too. So I think, okay, we just didn't touch it, but it doesn't have to touch it. But that's kind of, I did nibble the smallest amount. I did say that if we go lower here and start testing this ascending support, I will nibble a tiny bit. And I did the smallest nibbling. It almost didn't count. It was really just to bring 1 or 2 stocks back to the minimum amount that I want on the way down. But it wasn't that much. I'm still gambling for a move lower. So I haven't really, I've bought basically 4 stocks, small nibbles, just psychological nibbles more than financial nibbles. If we look at the GDXJ, that's closed below the ascending support. So maybe we can actually, and that makes sense because we had basically closed at ascending support whilst the GDX was nowhere near its ascending support. So I thought that might happen, which is one of the reasons why I think we might go a bit lower. I'm not sure where we're going to go. I think I'm going to have to keep an eye on gold and silver to judge when the GDXs are done. Because if gold is going to really make its move down to here, low 1800s, 1830-ish, let's say, and silver is going to go down to here, which is, I mean, let's be honest, a move down to there in silver is 4%, gold, maybe what, 1.5%, almost 2%. That will definitely move the GDXs down, maybe 4 or 5%. So I'm not sure. I think I'm gonna have to watch gold and silver to judge when the miners are done going down for a short-term bounce. And that's when I will actually nibble a significant amount as a first tranche. This sort of nibbling I've been doing doesn't count. So that's the way I'm timing the GDX and GDXJ real first entry. I think I'm going to have to watch gold and silver. And obviously, if I'm watching gold and silver, I'm watching the yields, I'm watching the dollar, and I'm watching the general markets, as well as the individual stock that I'll be buying. Because I'm not buying the GDXs. I'll be buying, maybe Barrick Gold or Pan American Silver. I've got sort of individual lines out for some of these. Maybe I'll make a video on later today on my actual portfolio because I'm ready to buy these So again, if I'm going to be buying the miners, I'll be looking at the miner I want to buy. For example, Goldfields, I think is very strong. So if it bounces, if the sector bounces, this is one that will definitely bounce. So you can see I'm very, very close. For example, which one did I buy yesterday? I bought that's Majestic. I bought a little bit. You can see why it's hit one of the levels. EXK, I just thought I'd buy it early in case I miss it. And then there was Fortune was the day before, I think, which is the same level. Oh yeah, and Discovery. I bought Discovery. You can see why when they're very close or they hit my first level, I nibble a little bit. Anyway, I'll make a video on my portfolio because then I can really talk about the individual stocks I'll be buying. So I can connect the individual stock to the GDXs, to the dollar, to the yields, to the underlying metal, and to the market. There's really 5 or 6 charts I'm watching before I enter. And I enter for a reason. And it's in several tranches with an eye on worst case scenario. I'll finish with Bitcoin very quickly. Nothing to speak of here. It was a sideways day. I think it's trying to find a bit of support in the sort of low 21,000s. I don't think much is going to happen this weekend because I think it's now taking its directions from the market. So it'll probably just, trade sideways, $300 or $400. Might have a small bounce next week because the markets might have a small bounce, testing 22,300-ish. This line here that it broke, it could sort of go up to there. Maybe just go a little higher and then go back down. And if it does go back down, so imagine we sort of trade sideways, goes up here and then back down, then you're going to be watching sort of this neckline here, if you know what I mean. Sometimes I look too far in the future maybe, but and then if it breaks that, then we go back down to here. Can you imagine something like that? I've actually just thought about that now, but let's see. Yeah, let's see. Anyway, I'll end the video there. I'll make another video on my portfolio. I think that one is going to be worth a watch, but hopefully you enjoyed that little recap. Have a good Saturday.